Good morning, friends. Today is 2nd November and I'm Shuchi Rungta presenting you the morning market update. The Nifty yesterday again opened higher and continued its strength, closing 133 points up above our marked resistance of 18,100 at 18,145. We had alerted much in advance that the break of 17,400 will have 18,100 on the cards soon, which got completed yesterday. The rally was broad-based with most sectors participating. Technically speaking, we have a series of higher highs and lows. I would like to highlight that from 11th October, Nifty has not closed below the previous day's low, which itself speaks of the trend. The slope of the averages are up. We complete a V-shaped recovery and finally cross the previous swing high. The close above 18,100 has eventually opened the doors for 18,500 and 19,000 in the medium term. The RSI indicator is close to 70, but we don't see any signs of topping out here. Hence, any dip in the markets should be an opportunity to buy and position oneself for the larger trend for the medium term. We would like to again highlight the market breadth. Only 63% of the stocks on Nifty 500 trade above their short-term 20 simple moving average, whereas on the Nifty 50 it's 92%, indicating that there is a lot much left on the individual stock front. Coming to the international market scenario, the US indices are still digesting last week's gains and had muted price action with a negative bias yesterday. Dollar index trades at 111 zone and FIIs were buyers in the Indian markets buying over 2,600 crores in cash. SGX Nifty is flat as of now. To conclude, the broader trend and momentum is up and 17,900 becomes the new support in the market where bulls stand strong. Levels for the day: Nifty support will be seen at 17,900 and 17,800. Resistance 18,360 and 18,500. For Bank Nifty, support will be seen at 40,600 and 40,400. Resistance 41,530 and 41,850. Thank you.